Hi, Steve Sosnick here with today's Interactive Brokers Midday Market Update for Friday, May 1st. Earlier this week, I put out a piece saying that we'll get a real test to see whether earnings matter this week, and pretty much they did. When Google and Microsoft reported good earnings, markets rallied. When Amazon and Apple disappointed somewhat, markets fell. Part of that is just math. As we noted, the market capitalization of some of these companies is so enormous that they really, when they move in a big way, they can't help but take the market with them. The Amazon one, there's a little misleading aspect to it because we rallied so sharply yesterday before falling. So you could pretty much cut today's losses by somewhat because there was a certain amount of enthusiasm going into the numbers that had been priced in. But what we're seeing is not all that different from what we had talked about. And that is the retail business for Amazon is ultimately not all that profitable. And then they're going to plow more money in to make it efficient, which is probably a good thing over time. But it's a pretty expensive stock with a business that's giving them some challenges. You'd expect a company to fall when that happens. You'd also expect that when you're seeing a forward PE, I checked the number just before it started this, and it's about the forward PE is about 67. That doesn't leave you a lot of room for a misstep, even if it's not a big misstep, and that's I think what we're seeing today with Amazon. One of the quirkier things today, of course, is Tesla down about 6 or 7% when I started doing this video. I can't recall ever seeing a CEO come out and say his stock is too high, at least not in that blatant of a terminology. I don't disagree with him. Tesla's a very fully valued stock. If you can go off a PE, their forward PE is about 200, which again doesn't leave much room for a misstep, and you really have to execute perfectly. To a certain extent, I've said before, Amazon and Tesla, to some degree, are what I would call faith-based stocks. Investors in those stocks who have been wonderfully rewarded for keeping the faith have a certain faith in both Jeff Bezos and Elon Musk and their ability to execute. Certainly in the case of Jeff Bezos, he's executed very well, not necessarily making his company all that profitable, but the investors aren't demanding that of him. So he's responding to what his investors are doing. They just want to see growth on the top line and figure the bottom line will come later. That's still yet to be written, but at this point, 2 decades in, that seems to be the pattern we have there. Tesla's a younger company, and there's a lot more broad challenges to the auto industry right now. We'll see where that all goes. But I think investors keep the faith in those companies, and I find it interesting actually to see where the CEO says that his highly valued stock is overvalued. Is actually kind of fascinating to see the market not reacting worse. In terms of today's sell-off, which is quite substantial so far, over 2% as we're taping this, just remember, all we've done so far is given back a week. It's really where we are. As I'm looking at this now with the S&P around 20, 28, 30 or so, we're down slightly since last Friday. We had a big upswing in the middle. We gave it back. That happens. But this is, I think, going to be remaining a fairly choppy market. I think there has been some over-enthusiasm. There's a long history of bounces after very oversold conditions that prove to be bear market rallies. My gut still tells me that there's a bit of a bear market rally quality to this because I've said this before, and I sorry to repeat myself. We're pretty much back to where we were last fall. When you could project a much better economic outlook than you can now, regardless of whether you think it's a V, a Nike swoosh, a W, whatever letter or symbol you want to put on the shape of the economic recovery. There's a lot of dust that has to settle before this market before the economy turns around. Yes, we have a super accommodative Fed, and you can argue that that's discounting, so that's helping discount future earnings by a more favorable number. But keep in mind also, Japan had 0 interest rates for the better part of decades, and that didn't necessarily lead to a huge multiple expansion over that time. So it's, as I've said before, Fed liquidity is a necessary but not a sufficient condition. So as we turn the calendar into a new month, it's not off to a pretty start. It's down for what I would say are the explainable reasons of, you know, unfortunate earnings reports from some market leaders, on top of a fairly frothy market. And this is what happens. Let's take a look and see whether this pattern continues or whether we see some continued choppiness. But as it goes, have a great weekend, everybody.